But without any further ado, please let our panelists hear it. So welcome to the stage, Barchak, Sonali de Rycker, Rich Wong, and Ben Holmes.
Sit here.
How do you want us to split?
We'll
However you like.
Yeah, that's
Squeeze
perfect.
Comfortable? No?
Okay, so let's start by showing the Finns how to introduce yourself properly. So Ben, let's start with you. Please introduce yourself briefly.
Hi, I'm Ben Holmes. Delighted to be here. I work with Index Ventures. We're a VC firm that's based in London, Geneva, and as of a couple of months ago, also San Francisco. We invest across life science and IT, and we've invested historically a disproportionately high amount of money in the Nordic and Baltic region. We've had a lot of great successes here. We're investors in Skype, we're investors in MySQL, Trolltech, King.com out of Stockholm, and we've got a lot of companies which we're very excited about here in Finland, in Estonia, Sweden, and Norway and Denmark. Delighted to be here, and I know there's a few emails which I've not replied to in the last day. I'm sorry I've been overloaded, but don't let that stop you from grabbing me later today.
Thank you, Ben. Rich.
Hi, it's good to see everybody again. Rich Wong from Excel. I think you guys have heard from me a bit, so I'll be brief and maybe let my partner Sonali explain Excel Partners a bit more.
That was too brief, Rich.
Yes.
So I think you've seen Rich, and I hope everybody enjoyed the drinks on us last night. And I'm sorry I wasn't here, but I'm here now, so I'd love to meet people. Thank you for having us here. It's really exciting to be here. I'm Sonali de Rycker. I've been in European venture capital for nearly 12 years. When I came 12 years ago, I thought it was going to be as exciting as it probably is today. So I was a few years too early, but very much glad to be here. A partner with Excel in London. Rich is a partner in Palo Alto. Excel is a global investment firm with offices in Palo Alto for about 28 years now, London for about 11 years, covering all over Europe, China, India, and very recently, New York too. We invest in both early stage companies as well as growth stage companies. Investor in a Swedish company called ClickTech, which was a Swedish software business, which I think is known to be one of the best European venture returns ever. Recently invested in Spotify, and very, very big believers in the sort of infrastructure and talent that's in this room and broadly in the Nordics. So very excited to be here and look forward to meeting many of you later.
Thank you.
My name is Barchak. I'm with Fidelity Growth Partners Europe. We're a £100 million pan-European venture and growth capital fund, investing in fast-growing European-originated technology startup companies. I actually also have a dual affiliation, so I am actually only partly international. I was born in Finland. I grew up in the US. Mutta vielä puhun vähän suomea. Varokaa. So I've made my first investment as a VC lead investor in September in a company called Neo Technology, which is a NoSQL startup company from Malmö, Sweden. But I'm very excited to be here because my geographic focus is the Nordic region principally. So basically everybody here is in scope from a geography point of view. From a stage point of view, we tend to get involved at the revenue stage. So our ideal startup is going to be something with over €1 million of revenue and growing very fast. We do make exceptions for exceptional companies who understand their own business very well and have a clear path to a business model, but we're generally not pre-revenue or pre-product.
Very cool. So, okay, so we kind of know why you're here then, Chris. but actually, so why are you here at Slush and not, like sunny California or like not so sunny London, I guess? But anyway, so you could be like anywhere else. So why are you here at Slush?
Well, I think the good and the bad thing I think about the Nordic region is that you get very innovative and original ideas coming out of the Nordics. And the classic example I would have would be MySQL. That was started as really not a commercial project at all, and actually stayed in that phase for many, many, many years. The guys had purely altruistic motivation for founding that company. And I suspect, had that been a Silicon Valley company, it might have taken a very, very different route and not have been the success that it ultimately became. And I think that's the great thing we see about the Nordics. You take a different path. You're not always looking over your shoulder at exactly what every single competitor in this space is doing, but you're genuinely coming up with exciting and innovative ideas. And companies like Spotify, Stardoll, where I'm invested, Grey Area in Finland, where I'm also invested, are great examples of that. So it's genuinely innovative and original business models and ideas, which we see plenty of them coming out of the Nordic region.
So it was about 80 degrees in San Francisco when I left, so it was a little warmer there. But no, as I said before, I'm really honored to be here. A couple-part answer to the question. First of all, I think our business is really all about relationships, and the reason why I'm here is because Peter asked me. Having a chance to work with him at Rovio and in companies before that, it's the chance to sort of build relationships with the next generation of entrepreneurs as well. I think the reason why, what's really different about entrepreneurship now compared to, say, 10 years ago, is that because of the rise of cloud computing, because of social distribution, because of the opening up that's happened in smartphone platforms, it's now possible to start a disruptive company that's not necessarily in, say, Silicon Valley or places where there's historically been a concentration of great startups. Whether it's companies in Australia, here in Northern Europe, here and specifically in Finland, Lithuania, or other markets, I think we're seeing more and more interesting companies pop up. So I think our desire, particularly in partnership with Sonali from the London team, is to try to identify those companies wherever they are in the world. We have had some history with this. Ilya from, some of you may have seen Ilya Lars speak from GetJar. I think that was one of the first investments done in Vilnius, Lithuania as a VC investment. And we think that was one of the most interesting mobile companies in the world. And for a lot of obvious historical reasons, for the area that I'm particularly interested in mobile technology, there's a lot of mobile talent in this part of the world. And so it's no surprise that some of the most disruptive, world-beating technology companies in mobile will likely come out of this area again. So I'm very appreciative of the opportunity to meet all of you and look forward to talking more about the specific themes.
Yeah, we'd strongly agree with that. The Silicon Valley does not have a monopoly on innovation. And what I really love and appreciate about the entrepreneurs that we meet from the Nordics, including from Finland, is that because the home market is so small, you have to think, if you're ambitious, you have to think internationally from the get-go. And really, we see ourselves as enablers for those kinds of entrepreneurs who want to build a global company. And as Rich said, when it comes, the barriers of distribution have gone away. You can go direct to the consumer, whether it's in China, whether it's in Australia, whether it's in Russia, whether it's in LATAM, straight from wherever you are building your game or building your product today. And that's a really exceptional time. And we think that there's a real hotbed of activity specifically in Helsinki at the minute. So I think what's happening with Nokia was unfortunate, but it means there's been a breed of great new entrepreneurs. There's a lot of talent. Ben talked about the history when it comes to the open source, MySQL, Linux. There's a lot of talent on the gaming side, security side. We think there's some sectors where there's been history of developing some great companies and great technologies. And given that sort of distribution is less of an issue and location is less of an issue, we think we'll be spending more time here from now on.
She covered it.
Okay, so there's a lot of startups in this room, and I was amusingly looking last night at Ahja when startup after startup after startup was coming to Rich to pitch. So what are you ideally looking for? What kind of a team do you want to see? What kind of traction? You said €1 million in revenue and fast growth. What else? So what do you want to hear from these people that would get you interested and you would like to see them again?
I think the biggest thing that Northern European teams often lack is product marketing and product management experience and success. I think engineering is not the weak point. I think it's not everybody, but it's really the commercial side. In Silicon Valley, I think the one strength they do have is that ability to take someone who's done it 5 times before, not 1 time before at the senior leadership level in product. But I would say, I don't think you're seeing much examples of companies which transplant whole teams to Silicon Valley anymore. I think R&D remaining in Europe is the model that we're seeing most commonly, that they're some of the best engineering teams in the world here, and at half the cost of a Silicon Valley team. So actually, I think there's no reason to outsource from Europe. I think Europe can be an outsource destination for Silicon Valley business teams as well.
That's good to hear. Sonali, what do you think?
It's always the same thing. It's a great team with a big idea. So we recently backed the team from Supercell here. I don't know where Ilka and Miko are. And it was a very early stage company, but it was an absolute record team with the track record and really deep domain experience. We do love that. So I don't think it's very different, to be candid, what we're looking for in a team in London versus a team in Palo Alto versus a team in Finland. I don't think the bar is higher per se. We're just looking for a great team in a big market.
Do you make, for instance, does Axel make seed stage investments? And do you make them in Europe?
Yeah, so I think that probably we have done 6 investments that are less than a couple of $1 million in the last year alone. That gives you a sense that we're very, very active. These are companies with nothing to show for many of them. And as I said, the team at Supercell, didn't have the really much launched in terms of the game, etc. So, we love the Rovios, but we recognize that we have to play very early in the value chain to be part of the solution. And so we're very happy to roll up our sleeves and do that. And we've done that that's the history and legacy of Excel. For 30 years, we're really, first and foremost, an early stage investor.
Okay, and Ben, Index just invested in Grey Area, the makers of Shadow Cities. So for instance, taking that company, I mean, what is it that why you made the investment decision?
Yeah, so Grey Area, as you know, they're a mobile games company. And the specific interest we had there was that it's our strong belief that whilst mobile gaming is growing and growing and more money is actually being deployed into that ecosystem, I don't think that the moment has happened in that industry where a Farmville type moment occurs, where somebody really understands the type of game you need to fully exploit the dynamics of that platform. And I remember I was an investor in Playfish as well, which was one of the competitors to Zynga. The revenue in that industry, to start off with, people were writing very crude games that made thousands of dollars a month. Then there were a few more innovations, and then it jumped up to tens of thousands a month. And then literally, I think Playfish came out with Pet Society, and very soon after, Zynga came out with Farmville. And suddenly, they cracked the can open, and they had games which were doing tens of millions, or low or mid tens of millions a month in revenue. That moment has not happened in mobile at all, despite the phenomenal success, I'd say, of companies like Angry Birds. I don't think anyone's yet built a magical game which fully exploits the uniqueness of the mobile platform. And I think when I saw what Grey Area were doing, I said, this is a stake I would like to have in that game, because they weren't just blatantly ripping something off from Facebook that had worked on Facebook or worked on another platform and sticking it on the mobile screen. They were really thinking about how do users interact with mobile devices. If I can just do one more second, in terms of what I generically look for, I have this concept of 3 T's: team, technology, and traction. But the spin on it that I really have is that I'm not looking for kind of beta plus across all 3. I'm really looking and expecting to see an asymmetry, either a spectacular team, which means someone who's returned a lot of money for himself or investors previously, or a technology that you just look at and say, wow, that will change the world. I remember that feeling when I first looked at Spotify in beta phase and Skype just the day it launched. Or traction, maybe the team doesn't look as though they're credible at all. There's nothing magical about the technology, but somehow they're getting enormous traction. So I think when you pitch, I think it's really important that you're very self-aware and think, which of these 3 things am I really great on? Because it's unlikely that you're great on all 3. And really what the VC is there for is to try and help help you figure out and add the missing legs to the stool. But the pitch of like we're quite a decent team. It's a fairly interesting idea, and we've got a few a bit of tentative traction. That never really appeals.
Yeah, hey, actually one question, just listening to you right now, and then of course we're here in Helsinki and we get all the Nordic success stories mentioned, but then, like thinking about it, how many UK success stories do you have compared to Nordic? And why are you in London in the first place?
I think London-based teams attract something like 42% of all venture capital in Europe.
Yeah, but I was asking about the success stories.
Yeah. Well, I guess, I'm not at Index anymore. Ben is still obviously there, but Betfair is a great example.
No, I don't want to reel through all our wonderful successes in London. I think what London has going for it is that it is a cultural melting pot, and I think what we've seen is many of the teams, including the ones which have their roots in Scandinavia, and I think of things like Just Eat, which came out of Copenhagen, or Skype, which came out of Estonia and Sweden, they often establish either a commercial presence or a bigger unit in London, just because that's a fantastic place to hire people. So I think I'm not saying you can't attack a global opportunity just from the Nordics. And a great example is Rebtel. They've got a business doing close to three-digit million run rate, just with 30 people in Sweden, doing a couple of million in revenue per employee. So I think you can do that, but I think London's a great cultural melting pot, and I wouldn't compare it to Silicon Valley at all, but it's the great sort of European hope, I guess, is that we do have a sort of density of business creation happening in London, but that can leverage the rest of Europe.
I think it's also like, New York has risen in prominence in the U.S. market for similar reasons to London, I think. It's the center of the advertising industry, the entertainment industry, the government. It's sort of like all of the, San Francisco's role, LA's role, New York's role, Washington's role placed in one thing, and you can get aspects of all different kinds of contributions to the team in one place. That being said, it is very expensive, and a lot of good ideas don't come from there. But it's sort of like Sand Hill Road. There are a lot of investors there, so it's very easy to have startups come through and pitch you efficiently all at the same time.
But I
Peter, if I could just add a comment.
Silicon Valley, I understand. I hang out there all the time, but like London. But yeah, that's.
If I just comment, I think to some degree, Silicon Valley has the problem even worse to some degree of being, in some ways, overly localized. I guess I'd make two comments. One is it's not a zero-sum game, right? I think just because there's a good density in one area doesn't necessarily pull capital away from another. In fact, I think potentially just increases the amount of entrepreneurial activity, which I think all of us, and I'm sure many of you would agree, is a good thing. The second, coming back to my first point that I made when we sat down, is I think it is changing a lot. That is why I think all four of us are here, and I think more and more people are traveling from their home bases, whether that home base is Silicon Valley or London, or in some cases Israel for other venture capitalists. Just as a tangible example, we've invested this past year and a half in a literally the opposite corner of the world, over $150 million in Australia. I would say that 3 years ago, we would have never imagined investing $10 million in Australia, but we seem to have found a cluster of companies that we like very much. I think one of them was described in the crowdsourcing speech, 99 Designs. Another one's called Atlassian that does developer tools. And we're starting to see some really, really interesting companies coming out of that ecosystem. I think you'll see the same thing in other pockets, like here in Helsinki, but sometimes it just takes a little time for it to develop.
So how do you think, or how do you see that Helsinki compares to London and Silicon Valley at the moment, and where do you see it's going? Sonali, for instance.
So, I just want to answer the last question on London. The reality is that you have to fly to a different city almost every day of the week if you're a venture capitalist, because you never know. This is a hits-driven business, and you never know when the big one will come from. And I think Nordics has had more than its fair share, which is fantastic. in terms of outcomes, which is why we're all here today. But the next big one could be in Russia. We've seen fantastic companies, Australia. So generally the feeling is you have to be centered somewhere, and then you have to get on a plane, and you've got to find the next company. And so we think London's as good a place as any. And there are some great companies in London. We're lucky to be investors in a company called Wong, which is in the online credit space, which is really a gigantic business at the minute and has done so in a short period of time. How do companies compare? I think that there is an adage that we've all heard in this business that when it comes to entrepreneurs who do their pitch, if it's an entrepreneur in Europe versus an entrepreneur in the US, the PowerPoint is much, much worse, and maybe the technology is a bit better. I don't know whether that's fundamentally changed, but certainly, brand has been done very well in this community, but not many startups in Europe are proficient in the go-to-market side, in the really selling their company. I think that's changing fundamentally, but I think we have to always dig a few layers deeper in the European companies to really figure out what's going on, what is the product about. That's getting better and better. I've seen it over many years, but I think that's probably the oldest comparison, which in some senses still holds true.
Okay, so how do you see? I mean, there's a lot of talk about hotspots in Europe at the moment, and we're speaking about London and Berlin and Stockholm, Estonia, Tallinn, and Helsinki as 3 possible regions. So how do you see these different places compare? I mean, what's interesting at the moment, and what do you think will be interesting in 5 years or 10 years? Rich, would you like to begin?
Sure, I think it's a little bit self-serving because it's the area I spend a lot of time in, but obviously, because of the history here in Helsinki, mobile has been, part of the lifeblood of the technology community. And for many, many years, a lot of us have tried to talk about mobile web and the early rise of SMS, EMS, MMS services, but it's now finally here in the form of sort of these open smartphone devices where the carriers, the Telias, the Soneras, the Tele2s, the Bytes, are losing the power to control that ecosystem. So I think there is this clear liberalization of what's happening in the mobile technology that is really, really, really exciting. And so I think particularly here in Northern Europe, because it was the original source of a lot of the core mobile technologies that powered the world, and obviously the creation of the GSM Alliance and such, I think that is going to be what's next. I mean, at least certainly it's going to be one of the things that's extremely, extremely interesting. And so, that's certainly one of the reasons why I spend a lot of time here, and I'm constantly trying to pick other people's brains, like Peter's and others, about what interesting new mobile infrastructure as well as application layer services are really emerging in different parts of the world.
I echo that. I think Helsinki, clearly there's an awful lot of mobile expertise here, and that's a place we'd expect many more successful companies to come out of in that space. I think Sweden historically has had a very high penetration of sort of a lot of the world's music is written in Sweden, and a lot of the best sort of creative web design is done in Sweden. So a lot of interesting companies come out of Sweden in that area, and I think Norway's obviously got other things like oil and gas industry, shipping, and we've actually got very, very close historically to doing various IET meets shipping or IT meets oil industry deals. So I think you're going to see different things coming out of different markets in Europe. Just to go back to Sonali's point about how we are organized to attack them as a VC, I think, yes, it's right, you can fly around Europe all the time. In a sense, sometimes being a VC, when you act like that, I feel it's a bit like playing a game of whack-a-mole. I don't know if you know what whack-a-mole is, but it's where you've got these all these holes in a fairground, and a little mole sticks his head up and you've got to bang it with a hammer. But the problem is by the time you see it out of the corner of your eye, he's down.
It's like interesting VC analogy right there. But yeah, thank you for that.
So the kind of the approach that we're increasingly trying to organize to take in it is not to just try and whack the mole as they come up, but actually to have a number of hammers held over a specific hole, and when he pops his head up, bang it. And the kind of the hole that I'm likely going to be focusing on a lot is Sweden, plus to an extent some of the Nordics, and various of my colleagues will also be very focused on that area. We will have other people focused on whacking the mole when he pops up in Berlin, Paris and Israel. So
I think
that's how we're organizing.
That's kind of like the Finnish approach to entrepreneurship, like traditionally has been this whack-a-mole kind of like thing. So I think that's like interesting kind of like choice of analogy there. But yeah, cool.
Yeah, I would say, I mean, I think in order of attractiveness of opportunities generally in the Nordic countries, I would say Sweden, unfortunately, has produced the most, in my view. Finland is probably my number 2 priority. Third is probably Denmark, and fourth is Norway. I think Norway has been a little bit complacent with its, resource extraction-based economy, and they haven't really produced to the extent that they could. Otherwise, in Europe, I think Berlin is really the emerging web center, and I think we'll be spending increasing time there.
Yeah, actually, I think Berlin is interesting because, again, okay, asked about like why London, but if you look at Berlin, it's like dirt cheap to live there, and it seems like they have that going. But one thing also that, okay, now we're talking about kind of like the current setup, but if you look at now, let's say 5 years out, Baltic states, we already see, I mean, there's a lot of Baltic startups, really cool ones here. But then another thing that I think that what we also see here as Slush, Russia. And I mean, Russia is like huge. So what do you think about Russia? And that's kind of like in the neighborhood.
So we have the pleasure of having to fly to Moscow very often, which is always an interesting experience. Look, the metrics are there. Russia is going to be the biggest internet market in a few years. Very, very active in terms of technology, talent, and development. The government's intervention, support, which is actually something that's very positive in this community, is a question mark there. I think they are trying to do a lot in terms of incubation, and they're generally trying to stay on the right side of the technology, especially if it's not sort of a sector that's central to them, like media, for example. And so there are a lot of e-commerce is a sector when it comes to software, lots of interesting software companies that we're seeing. So for sure, Russia is extremely important. It's, for the Europeans, it's the only brick we have in our backyard. And we're taking it very seriously. It's not easy to do business there, candidly, in terms of both from the boring admin stuff of sort of corporate setup and, governance, right down to hiring is extremely difficult. Candidly, if you're going to build a domestic market champion as opposed to an international player, it's not easy because you're competing with the Walmarts and the P&Gs of the world to get kind of talent. And so, we've invested in 2 Russian companies. I'm on the board of one of the larger e-commerce businesses, and we're very excited about it, but we're excited with some caution, I would say. But we're actively there a lot. Maybe we have the few apples to put over the moles. I'm gonna learn this one.
Yeah, I mean, on Russia, I think to be candid, I do think VCs and the bigger the check you write, the more you do at the back of your mind still worry about the sort of confiscation risk of investing in that geography. That is real. I think it's more. I think it showed its head more for kind of bigger buyout and type deals, but that's an issue. But it's a massive market. We've done one investment, which was Ozon, which is, we call it the Amazon of Russia. I think that's an aspiration, but it's a big company doing very well. But I think actually going forwards, probably as much of our effort in that region is going to be on export businesses with a development center in Russia, which I think there's a lot of Russian talent there, and I think the confiscation risk is much, much lower where you're not relying on the Russian market.
So we're very cautious on Russia. We realize there's a big opportunity. Obviously, Yandex has proven the market value of that company is amazing. We've chosen to focus on Central and Eastern Europe, and for us, I think the exciting brick-type market is Turkey. And so we're spending a lot more time there. I think that's where we'll focus our efforts. I think for Finland, that Russian talent is an opportunity to potentially rehome some of those teams in Helsinki and make it sort of package friendly for the rest of the world.
Okay, so you said that you're mainly investing in basically companies that are doing business in Russia instead of exporting out of Russia. So you see this as a problem or perhaps an opportunity?
Yeah, I mean, we would have loved to have invested in Parallels or one of those, or successful export companies out of Russia. So we're continuing to look. By chance, we happen to have done Ozon, which is a domestic play so far. We have actually done one seed deal there, which I don't think has been announced yet. I always tend to blurt things out wrongly at these events, so I'm not going to mention it.
It was on TechCrunch, wasn't it?
Or was it? Was it on Tech? Well, everything's on TechCrunch. well before it's official. Yeah.
Okay, but there's actually a lot of angel investors present here today also. So as international venture capitalists, how do you see, I mean, what kind of angels are you looking for? What would you like to, see be done in these companies you invest in with I mean, as an angel? I mean, basically all of the companies you've invested in Northern Europe have a, previous investor, local one. So what kind of angels are you looking for?
I'm sorry, what types of angels?
Yeah, or what kind of angels do you prefer? What stage do you want the companies to be at when you invest in them? And what kind of networks and others you would like to see these angels at?
Yeah, I think just speaking for ourselves pretty broadly, I'd say I think we found ways to work with just about any type of earlier investor, be it a family set of angel investors, or whether it's more institutional seeds, or in some cases regional venture capital firms that have invested previously. And the honest truth or reality is that we probably look less at the investor syndicate, and back to the earlier comments, just more at the team. Maybe I just use this as an opportunity to make a comment that oftentimes, particularly in the early stage, the discussion is often about the technology solution or about the particular service that's being offered. When at least I or a number of us sort of look at different investments, oftentimes I sort of try to stare at the authenticity of the entrepreneur about understanding the problem that they're solving and kind of how big that problem is. Because oftentimes when it's early stage, by the time you actually get to market and competitors 5, 6, 7 years of growth later, the problem is actually the one that stays the same. The solutions in the competitive environment change quite a bit. So it's really looking at the problem statement and the ability of the entrepreneur to tackle that I think is most important. And the assessment of the investor syndicate kind of comes second to that, in my view. I just simply said, if it's a really great idea and it's a great entrepreneur, we'll deal with anybody. This is the earlier investor. If it's kind of an okay idea, then you sort of don't want to have as many headaches. So I think it's really the focus on the entrepreneur and the idea and the problem is most important.
I think there's a great answer. Is that it's true for great companies there are no rules in many ways. The reality is that I think there's a difference between a serial entrepreneur, a repeat entrepreneur, and a first-time entrepreneur. And my experience has been for kind of somebody who's doing it for the first time, having a local angel who's sort of sensible, who's thoughtful, who's going to be sometimes the first call, if not the second call, around a tough topic around hiring, strategy, business development, product, is very helpful for us because we can't be everywhere. We're all small teams. And in most cases, when there has been that kind of a construct of somebody local who is the person who is seen as quite a close advisor to the entrepreneur, especially if it's sort of, I don't want to use the word inexperienced, but a first-time entrepreneur, because every problem is the first time you've actually dealt with it, has worked very well. So we prefer that. Especially, we've done that in Russia, for example, somebody who's local. It makes a big difference.
Yeah, we value relationships with local investors. In my first investment, we actually did follow Connor, a local Finnish VC. Sami might be there somewhere. I don't know. There he is. So I think I appreciate working with local investors who also provide an ability to judge the team's ability to execute, because I think it's hard in a few meetings to know how they're performing. And I think if a local investor has maybe worked with someone who worked with them before, they can provide that sort of referenceability that you can't find in just the more superficial meetings. So if a local investor will not just show me their entire portfolio, but actually steer us towards the ones that are the best ones, rather than the ones that they need to extend their runway. That's important.
Yeah, I'd say that there's a very different phenomena in angel investing in Europe generally versus US. I think my perception is what's happening increasingly in the US are these very large syndicates of angel investors, which include Ron Conway, Shaquille O'Neal, Dave McClure, MC Hammer, Ashton Kutcher, who I'm sure are fantastic individual individuals and nice guys to have involved in your company. But generally, I think getting someone on board, believing that they're going to be an amazing promoter of your business and help you with, help you make a PR impact and look good when TechCrunch write about the story. I don't really buy into that, to be honest. And I think when you have these massively long lists of angel investors, I sometimes fear that who's really contributing, everyone's going to assume everyone else is kind of contributing and the ball can fall between the planks. So I think, particularly in Europe, what I'm more looking for is one or two angels, and it's exactly that point which Chris has made. It's around helping us get comfortable with the teams, understand any sort of native or linguistic or cultural things which we don't about the market. And we invested in Grey Area alongside or following Pettery and Lifeline Ventures, who've played that role fantastically for us there. And I think that's kind of the way we're probably going to go on, rather than trying to bring MC Hammer into our next Finnish deal.
Okay, but let's open up the discussion for questions also from the audience. So there are a few microphones going around the audience. So if you have a question, please just... Okay, Jussi Laakkonen is the first one to raise his hand. So.
Surprisingly enough.
Hi all, my name is Jussi. I run a company called Amplifier. So we talked about investment, but to make this business happen, we need exits. And obviously you have to be masters of that to have your fund run. How is the European exit landscape? Do we have European buyers, or are we at the mercy of the North American conglomerates to buying European startups? So do we have an opportunity to exit here, or do you always need to go and start a subsidiary, move your headquarters to the US in order to have an exit?
I can start. It's not a simple answer to that question. I think there are two kinds of companies. There are companies that, as Ben coined it, are export companies that are building products for the global market. And then there are others that are building local businesses, typically consumer, but doesn't have to be. So really local brand, and they can be big businesses too, but they're really focusing on a single country. And I think the exit dynamics are extremely different depending on what kind of company you're building. In the first case, I do think you have to be very, very successful. You really have to hit the globe, for the most part. You have to hit the global, you have to be on the global target. You sort of have to do the right things. You have to have the right team approach, etc. And then, of course, I think there are buyers. There's a long list of great European companies that have sold to the Googles, the Microsofts, the eBays, etc. Some have been local champions as those companies have tried to sort of build up their local stranglehold. But in general, I think you have to be quite sizable and absolutely have category leadership. When it comes to the local companies, there's a number of sectors, e-commerce, media, etc., where you do have local champions, whether it's a Schibsted or whether it's Axel Springer in Germany, you absolutely are able to sell to whatever the incumbent is in the local market. And so when we think of an investment, we're constantly thinking, if it's an M&A, then there's always the public IPO track, where the bar is very high, candidly. But if it is in an M&A situation, are we really targeting the local buyers? And if so, do they have the capital to actually buy an asset like this? And how many of them are there? Are we really relying on international buyers? And then in that case, you really have to build a global business. And then the team has to want to do that. And it means you typically have to have distributed management teams in terms of the locations where you build the team. You went through this journey yourself when you went to the US, so I have a sense of why you're asking this question. I think it's kind of horses for courses for the most part.
And we'll buy stuff.
Exactly, and then there's always the mighty eagle.
I just might say two things about that. First of all, it very much depends on what sector you're from, because, for example, in some clean tech or solar investments that are done in the United States, a lot of the likely buyers are European, right? So it just sort of depends on, in that particular sector, the major large market cap players just happen to be European, not American, some are Chinese in that particular case. I do think, the math is what it is, which is when you look at IT and market cap, there are certain players, the Microsofts and the Googles, and used to be Yahoo, not so much anymore, but certain internet players that have high multiples, large market caps that can pay a lot for a lot of different types of companies. And I think it's just important to be pragmatic about it. You don't want to build yourself for sale, but it's probably worth having some representation and linkage to those corporate development and the heads of the business units that will ultimately make those decisions. Human beings sort of tend to think about what comes first in their mind, and if you were last at lunch or having beers with them, maybe you'll come to mind before the competitor. So I do think it's worthwhile if you are in a location outside of Silicon Valley to have some representation, have one business development executive or marketing executive, or at least come through on a regular basis, because I think it could make a big difference when it comes to one of those large cap players making a decision.
I think life science is another category that can invest well, exit to Europe, like Novartis, GSK, those kind of buyers. In advertising technology, I think WPP could be a buyer for some companies, but I think clearly there are more cash-rich American companies who can buy European companies. I think that's actually one of the risks to the ecosystem, is that great European entrepreneurs get acquired by US companies, which I think in itself is fine, but they tend to move to America for the transition period, and then they tend to do their angel investing locally rather than in their home market.
Yeah, I think that's one thing that we need to fix here in the ecosystem. That if you look here in Finland, we've had Nokia, and they used to be successful, but they didn't really provide an amazing exit route for local startups. And I think that's something that, again, it's very, very important. And that's why we're very open on Rovio side that we plan to acquire companies. And that's one way we'll grow. And I think that, again, we have some industries in Europe, as you said, Chris, that where that works. But for the tech side, it's been, you sell your company to Google, and we have several examples of that. And, we really need to fix that, and it's something that we absolutely have if we want to have a working ecosystem. So, hopefully we'll get there.
You had a question.
Hi, I'm the founder of 46 Elks, a cloud communication platform in Stockholm, Sweden. My question is about the next 5 years trend. Which industries do you think will see lots of the startups will flourish in those industries? And what is your favorite industry for the next 5 years?
I'll have a quick stab. So we actually tend not to just think of very specific sectors and pile money into sectors. I think that approach can lead to doing sort of consensus investments and investing in crowded spaces. The approach we take is to try and step back and think about the fundamental themes more than the specific sectors. And I think probably two of the themes which we're focused on a little bit at the moment is the first generation of marketplace businesses characterized by eBay were really about creating an online marketplace for people to transact online. And I think there's a new trend in marketplace type businesses for really disrupting substantially offline service businesses rather than just sort of trading physical products. So we're looking a lot at how we've had good examples with companies like Betfair in betting, but we're looking at the same sort of concepts in how people access talent, how people get credit, how people find hotel rooms, and all these type of or how you exploit underutilized assets through an online marketplace model. So that's a theme that we're looking at quite a lot. If you're going to go to a sector, as I mentioned, I do think that mobile gaming, that there will be some very exciting companies built in that space, and I think that's where a lot of the action will be in terms of value creation in the consumer space in the next couple of years.
So I would just make a comment. I talked about mobile before, but let me just make another related comment of categorization. Before I became a venture capitalist, I spent 3 years being a telecom operator and 7 years painfully selling to telecom operators. And if you've ever done it like I have, you don't want to do it again because it's painful, slow, long, and a very, very difficult business model. And so what I would say is anything that involves really, really long sales cycles sold to people that move very slowly, that are monopolistic buyers, I'm not interested in. I'm interested in things that are more frictionless in their distribution, that move faster, and that allow you to in some cases use consumer marketing techniques as a mode of distribution or techniques that allow you to sell to developers. Because I tend to find that these more slow-moving, expensive enterprise salespeople calling on slow-moving big customers tends to not work out super well for early-stage venture capital models. There are many, many exceptions, but somebody else will fund those exceptions. So at least that's what I personally look at or am personally scared of.
Okay, any other questions from the audience? Okay, there.
Tomi Päärinen, glad to see you in Helsinki. Can you highlight how you build your portfolios? Do you regard companies to be independent, or are they just like pieces adjoining other companies? How do you evaluate your basket of companies?
So is the question, do we require our businesses, once we invest, to work together? You can just shout.
No, when you buy, look, let's say you have a 2-year plan. What type of companies you would be acquiring? How do you make the decisions what your portfolio will look like?
I
or
wish
do you,
we were scientific.
would this be individual decisions, or do you say, oh, we want to have 2 or 3 companies doing this in that particular stage, and 2 or 3 companies in this stage? Would it become more like a game of evaluating the companies in relation to each other? Or is it just like individual companies?
I would say they're principally individual decisions on their merits. I think it also depends on where you are in the fund life cycle. If you're in the later stages of a 10-year fund, you might make slightly different decisions, like you wouldn't do a seed investment in year 8. So as far as stage, you might balance it that way. But I don't think, and we would avoid over-concentration maybe, but I don't think we would require anything to fit with anything else. I think they would be independent.
Okay,
I would say we largely have no idea.
Yeah.
I mean, we want them all to be Rovio and Facebook, but who knows, right?
Yeah,
I mean,
we
so you
hope
do
they
your
are.
best, right? And yeah, you try to not have everything in clean tech, you know, because that could be bad. But you try to not have everything in telecom. But for the most part, you try to find the best companies you can and try to have a reasonable diversity.
Thanks for your reply.
Hi, my name is Oksana, and my question is, there are more and more startups willing to raise money, and actually in the world there are more and more accelerators willing to give money. Yeah, so we see some kind of probably a bubble. So do you change somehow your strategy of finding good startups, good companies in terms of this market trend? Thank you.
So we ourselves have to go and raise money every few years, and a question that's increasingly asked and often a lot of investors at the moment is, are early stage valuations crazy? And it's a very valid question. Early stage valuations have gone up. You know, my answer to that really is that yes, you know, you are seeing companies at early stage get higher valuations at the moment. But interestingly, often although they may be only 4 or 5 months old as a company or a year old, the information that you as an investor have about the likely success of that company is much, much more now than it would have been in the past. And it touches on what Rich mentioned. With the increasing consumerization of the way products are put together and distributed to the market, you know, it might be a company that's at early stage, but if you've already had the chance to see how the first cohort of customers interact with that product, if you're already starting to get some metrics around the virality, around the subscriber acquisition cost, you might be prepared to invest at something which is very, very early in terms of product or revenue stage, but you actually feel a lot of the risk factors you actually feel more comfortable about than historically you would have had to do with early stage investing, where someone was saying, you know, can you give me a $5 million check? I'm going to go into a bunker for 2 years and come out with something at the other end, which we'll try and sell. So yes, early stage valuations are going up, driven by a lot of the capital that's now chasing these in the accelerated groups. But you often know a lot more when you invest at early stage in this generation of companies than you did in the past.
Okay, questions from the audience? Over there. I'll sneak in a question in between. So, how do you see, founders in your companies? I mean, how much salary to raise from the company? Do you do secondary rounds where you buy stocks from the founders? I mean, founders can be valued high on paper, but not have any money on their bank account. So, how do you see the founders in later rounds?
I mean, we're certainly willing to do some secondary. I think it has to be evaluated within the context of the specific situation. I think we wouldn't like to see a founder sell a very large part of their stake. It misaligns incentives, but I think the reverse is also true. If you don't allow them any liquidity at any stage, then you're also misaligned. So it's specific to the situation, but a minority of their stake, 10, 15, 20%, I think that's negotiable. But they have to have achieved something. I think if they have a quite high probability of going to a zero value, then we're less interested probably in secondary.
It depends on the context, to be candid. I think there are some businesses where we believe this has got very serious and enormous potential, and it'll take a few years to figure that out. And in that meantime, we like alignment. And what alignment means is being patient in many situations. And sometimes the founder feels like he or she needs some sort of security. So doing a secondary really helps to make sure you're all aligned to ride the next part of the journey, because maybe the number at the other end of that is going to be substantial. So, we really don't have any specific rules around that. We're very open to that and have done so in many situations.
Okay, but we had a question from the audience.
Yeah, Eero Kaikkonen from Montlet. This is, I guess, mainly for Rich. So in the early days, it used to be, so most of the VC money is still in Silicon Valley, and in the early days, it used to be that if you wanted to get investment from there, your headquarters had to be there as well. Do you see that changing, or is it still the case that if you want the money from Silicon Valley, you have to be in Silicon Valley?
No, I think it's clearly not the case. I think there's many, many examples to prove that. You can see them on TechCrunch Europe. You can see them all over the place. Rovio is obviously based in Espoo. Spotify, obviously in Stockholm. So there's many, many examples, I think, where that's not the case. To the question that was asked earlier about managing the company for growth and ultimate success, and success meaning some form of financial outcome, I think it's useful to have visibility to Silicon Valley markets. Certainly in mobile, as I was speaking about before, because Android and iOS obviously are now becoming sort of San Francisco Bay Area, in addition to here because of Nokia. It's nice to have a touch point in multiple markets, but it doesn't have to be headquartered in Silicon Valley at all.
Okay, we have time to take one or two more questions from the audience, so raise your hand if you want to ask one. Okay, there.
Hi, Tarmo Erkki from Reuters. Ben, as you mentioned, you do have to go sometimes to raise money yourself. How much this whole European disaster related to Greece is impacting the VC investments?
Yeah, no, I can answer that. So there's two sides to the coin. Is A, how is it for us to raise money in this environment, and B, how does it impact our portfolio companies? And I think usually for all our portfolio companies, they were almost always, with the exception of some of the later stage companies, too risky to get debt even before the crisis. So we didn't rely on debt as an industry. And the other comment I'd make is usually if they're doing half decent, they've got a sufficient trajectory that yes, they might be impacted plus or minus a few degrees in trajectory by the economic climate, but they're driven by such fundamental wins in terms of movement of trade from offline to online that they can still grow. And indeed, in many cases, I think this problem, particularly in Europe, but more globally, is going to knock out the offline retailers a lot more and potentially could act as an accelerant to a lot of online businesses. It does impact us in fundraising in a slightly bizarre fashion. A lot of our investors have a perspective that they want to have, say, 15% of their money allocated to venture capital, and suddenly they see stock markets tumble. We as VCs are actually doing quite well, but suddenly they look at their portfolio and they say, well, now I've got 25% in venture capital, that's too much for me, so I'm not going to invest any more in venture capital. So I think it can have perverse effects. I think generally looking at our portfolios, I think portfolio companies, they're all mostly doing pretty well, and not as impacted as the traditional incumbents in many of their industries by this current state in Europe. But it's certainly something we're keeping an eye on very closely.
Hello, Thomas Muha. One more question about money. So, investing money versus investing money in advice. So, how active are you with your investments, and can the companies count on how much support can they get other than money?
Do you want to ask Peter?
Yeah, it seems to work pretty well. Yeah, I mean, obviously, I mean, it's not all about the money, and kind of like when we did our like fundraising on Rovio side, was actually not at all about the money. It was all about the people. So you know, that's really most important thing, and I think that we've been very happy with all our investors. So we've gotten a lot of help, and that's kind of like you should never raise, you know, like stupid money. It's all about the people.
Okay, so let's ask one final question, and then we have one more question for the audience, if there is one, and then we'll be finished. So there's a lot of very early stage companies here present today, some of whom have talked with each or even every one of you. So how would you like to see these guys follow up with you? How would you like to maybe see their progress, so forth? So what's next for them? Perhaps we start with you, Ben.
Yeah, I mean, all I would say is I'd echo the comments I made before. We, as VCs, you go through certain phases where you can get overwhelmed. So please, please, please don't be offended if I haven't got back to you. It doesn't mean I'm not interested, and please just keep plugging away. And being at the top of my inbox is probably the best strategy to get attention. So I guess I'm not helping myself by saying it, but that's what's probably the best advice for you guys.
You know, so I totally agree with Ben's comments, and I think we have sort of the benefit of having obviously a dedicated office in London that, you know, looks across this region. So certainly Sonali and a number of the other people that are here from Excel today, any one of us would be happy to follow up with the people. The one comment I'd make is, in terms of breaking through from sort of the interesting cocktail conversation to the next one, sometimes it just helps to have an ongoing dialogue and trying to get advice and brainstorming ideas. So, you know, a lot of us are wandering around, in my case, mobile, a lot of different sectors, and you sort of see somebody 2, 3, 4 times, and you start talking about ideas, and you have brainstorming conversations about ways they can grow their business. You suddenly find yourself more and more interested. So in addition to meeting people for fundraising, what I try to do is try to meet people a year before you need fundraising and try to build a relationship brainstorming about the business rather than just talking about now it's time to raise money. It'll just make it a lot easier to get people interested and excited about, you know, your business.
I'd agree with that.
Yeah, and actually, I think that's a great point, because I was talking to somebody last night, and then got this comment, yeah, we're actually not raising funds right now, and I said that you actually are always fundraising, and what I mean by that, exactly what Rich said, that you should always take the opportunity to talk, discuss your business, because, you know, then these guys will already know you. And it's really, really important that you can do that. So it's not that, oh, hey, now I need some money, and then who do I call? And then you can get into this fundraising panic. So, you know, it's really very, very important. It's all about the relationships. Again, I mean, when we raised money for Rovio, it was all about the people. We wouldn't work with, you know, people that we don't know, that we don't trust. And again, you know, so really, you know, take the time, and now you have great opportunity. You have all these guys here. You know, you might not be needing money right now, but maybe you need money tomorrow. So, you know, talk to them.
People who don't need money are the most popular entrepreneurs anyway. So.
Yeah, exactly.
Okay, but our time is up, so let's give a big hand to our great panelists. Thank you.